Okay. Franklin Londo is my name. I'm a lead tutor and chief executive officer at FCL Accountants Tuition Center. I have vast experience in lecturing, over 20 years. And in today's video, we are looking at the trial balance, posting to the ledger, entering in the cash book. Basically, we are focusing on the double entry. If you want to understand this topic properly, I would advise you to check the first series that we did on the double entry. We did the double entry concept. We also did the common terms used in accounting. We also did the business transaction, that is the cash and the credit. Please, you can refer to that video. You find it on the YouTube channel for FCL Accountants Tuition Center. So today I'm going to explain what a trial balance is. A trial balance is basically a list. Is a list of debits and credits. Balances extracted from the cash book, and the ledger accounts. So that is the meaning of the trial balance. A list of debits and credits balances extracted from the cash book and the ledger accounts. So the ledger is the main book of accounts in which the double entry is completed. Now, I want you to understand the purposes of preparing the trial balance. The purposes. The purposes we have, I want you to understand the reasons why the trial balance is prepared. One is simply to check the compliance, of the double entry concept. The compliance of the double entry concept. The compliance of the double entry concept. Now, the trial balance has two sides, the debit and the credit. If the double entry is properly done, the debit side total will be equal to the credit side total. In simple language, the trial balance will agree because the double entry is properly observed. Number two reason for preparing the trial balance is to check the arithmetic accuracy. Check the arithmetic accuracy. Check the arithmetic accuracy. Again, if you have done proper additions and subtractions in the ledger accounts, then the trial balance will agree. Number three, The other reason a trial balance is prepared is simply to provide information for the preparation of the final accounts. So provide information for the preparation of the final accounts. For the preparation of the final accounts. For the preparation of the final accounts. So basically, those are the reasons why the trial balance will be prepared. Now, it is very important for us to be able to understand that when the trial balance agrees, the debit side total is equal to the credit side total, it only confirms two things: that the double entry was properly done, and also the arithmetic accuracy was properly done. But there could be errors that have been made which are not detected by the trial balance. That is very important. So now for today, we are looking at entering in the cash book and posting to the ledger. So only cash transactions are entered in the cash book. So we are going to look at this equation. So we have the question here. So the cash book will be here. In the first series of basic accounting, we did discuss the double entry, and also we discussed the ledger accounts and the principle which you follow on entering the transactions in the account. So we have the cash account here. We have the cash account here. The debit side is the receiving, the credit side is the giving. So we have on 1 January, put in cash 2,000 as capital. So the cash is receiving. Make sure you're understanding. On 1 January, the cash is receiving capital. Under there is general ledger. So the amount received is 2,000. We discussed in the first video that for every transaction, there are 2 accounts involved. So the other account will be the cash. Sorry, the cash we have already done. The other account will be the capital. So capital account is giving out. So you credit. So there we have, it's giving to cash, 2,000. So the double entry is complete. There is the account that is receiving, in this case, the cash, you debit, and the account that is giving, in this case, capital, you credit. On the same date, purchases, brushes, combs for cash. So those are purchases. So we go on 1 January, purchases. General ledger number 2, that is 50. We go to the general ledger, purchases. The purchases here, we are receiving. The cash is giving out cash, but the business is receiving purchases, so you debit. I'm sure that is okay. On the same date there, this purchases was by cash, 50. And then we got to, on the same date, purchased hair dryers from G Limited on credit. Now you need to understand credit transactions are not entered in the cash book. But here we are buying the hair dryers are machines. Is that okay? Those are non-current assets. Please refer to the first series of the videos on the double entry concept and common terms used in accounting. So here we have we have the account that is receiving is dryers, which is machines. The dryers account, that's the machine. We are receiving. We are receiving, this was on credit. So we are receiving from J Limited. We are receiving 150. And who is giving? J Limited is giving. The J Limited is giving the dryer, which is 150. The double entry there is complete. The double entry is complete. Now we got to 30th January. We have paid the rent 3 months, paid 3 months rent to 31st March. So cash is giving. So this is on 30th. The rent, general ledger 3. The rent paid there is how much? 300. Then we open the rent account. Rent is receiving the service, 300. Then we got to collected and paid in, checking 600. These are sales. That is January sales, general ledger 4 is 600. You open the sales account. Sales account is giving, the cash is receiving. Cash, 600. Sales account is giving out the service. The cash account is receiving cash, you debit. Then we got to give Mrs. S a payment, highlights, etc. on credit. That's a credit transaction, does not go to the cash. So who is receiving? Mrs. S is receiving. S account is receiving the sales. How much? 80. This is in the sales account. S, we are giving sales to S. S, 80. Are we together now? Now, it is important to understand that the accounts are balanced at the end of each year. sorry, at the end of each month, not here. The ledger accounts are balanced at the end of each month. So here we balance. When balancing the accounts, you always start with the side which has a bigger figure. So the debit side here, we have 26. And there are 26. Now, out of 26, we spent 50 and 300. So at the end of the month, which is 31st, the balance there will be balance carried down. So here we are going to have how much? 22.50. Always the balance is is brought down on the other side. This will be on 1st February. So the balance there will be brought down 22.50. You also balance the cash account. There's only one figure. So for them to balance, even that side must carry the same figure. The balance carried down 2,000. And you bring it down on the other side, which will be the balance brought down 2,000. Then now you also balance the purchases. There's only one figure there. The balance carried down is 50. Then you bring it down this side. The balance brought down 50. And you also balance the sales account. There are two figures. So there it will be 680. Total 680. To balance there must also be 680. You bring it down. Balance brought down 680. Then we have SZ Limited is only one figure. The balance there carried down 80. The balance brought down 80. Then we also have the J Limited. There's only one figure, the balance there carried down 150. And the balance there 150. And there we have the dry account there. The balance carried down 150, brought down. Balance brought down 150. So we have balanced all the accounts. After the accounts are balanced, you need now to extract the trial balance. Now, I want you to understand the concept on the extraction of the trial balance. For example, if the cash book here, it has a balance brought down of debit. Therefore, it will be on the debit side of the trial balance. Capital here has the balance brought down, which is credit. It will be on the credit side. So the simple concept is if an account has a credit balance brought down, it will be on the credit side of the trial balance. If a balance has a debit balance brought down, then it will be on the debit side of the trial balance. So the rent account, we did not balance, we can balance it. That is carried down 300. Brought down, balance 300. So all the accounts are balanced. So I want us now to look at the trial balance. We go to the trial balance and just create some space. Okay. We have created some space there. Good. So now we go to the trial balance here. So we have the debit side and the credit side. So we have the cash account. Cash account at the debit balance. So even here it will be debit 2250. And capital as a credit balance, 2000 to be on the credit side. And dryer account is an asset. It had a debt balance 150. And rent, the debt balance 300. And we have the purchases, the debt balance 50. And sales, we have credit balance. Sales here is this one, credit 680. And then we have J Limited, who provided a dryer. The balance is 150. And then we have Mrs. S, who got goods on credit. The balance is 80. So if we have done a good job there, the trial balance will agree. The total here is 2830, and the total there is 2830. So it means that we have done a good job because the trial balance has agreed. So in the next video, which will be series number 3, we'll be looking at the correction of errors and the suspense account. We'll explain the categories of errors, those which affect the trial balance and those which do not affect the trial balance. And then we shall explain the suspense account. Please be on the lookout for series number 3, basic accounting. For today, we can end here. Thank you very much for watching this video. God bless you.